If you think about it with my idea that gold is for war, if you're thinking gold is for war, Trump gets in, declares trade war with China, boom, up it goes.
What happens when something goes too fast?
Well, it's called a bubble. Boom, bubble, bust. Up like a rocket, down like a rock. The economic outcome of that is, a weaker dollar, inflation, going for growth, and all the sort of interventions you're seeing with Intel, with Mountain Pass. That is all about America versus China.
Gold hit $4,000 for the first time in history. Silver is almost at $50 an ounce. Bitcoin is now above 121. It's come down a bit today on the 7th of October. We'll talk about what's next for these alternative assets and what's next for stocks. Are we in a market bubble? All around. Clem Chambers joins us. He is the founder of ANewFN, and Clem has been on the show several times. Check out our last interview with Clem. Link down below. Good to see you again, Clem. Very good time to be talking to you. Thank you.
Well, we've been calling it, me and you, for the last few times we've been on, or in fact, for months and months now. And here we are, gold heading towards 5,000, silver heading towards $100 an ounce. And to be honest with you, it's scaring the living daylights out of me.
Why is it? What do you mean it's scaring the living daylights out of you? Shouldn't you be celebrating? Shouldn't you be pulling out your branding and champagne?
Well, I can drink my fine claret for sure, but it's going too fast. I mean, my premise, as your viewers will remember, is gold is for war. Well, I'm talking about a slow plod up the mountain of tension, not a sudden rush into the apocalypse. And, if gold is for war is the thing, and all of a sudden gold starts to go vertical. I mean, it was going vertical, but now it's gone vertical, and silver's gone vertical, and palladium is gone vertical, and palladium is not under sanction from Russia because America can't do without it. So then put sanctions on platinum and palladium because it's a vital metal, and there's only three places that make it: America, South Africa, and Russia. And palladium, so, gold going through the roof, silver going through the roof, palladium going through the roof. It's if you believe gold is for war, you've got to be, starting to shake in your boots like I am. Fortunately, and Bitcoin, of course, Bitcoin is for flight. Bitcoin's been doing that, but fortunately, it came down $3,000 in the last couple of hours, and I feel a little bit relieved because if that had gone straight to 30,000, I think I'd be digging a trench.
How much sooner did gold reach $4,000 than you may have expected initially? In other words, if let's say there wasn't any chaos or war happening around the world, when would normally be your expectation for when gold would hit this current level?
Okay, so when you're in a rally, it goes at sort of like a 45 degree. When you're in a boom bubble, something bad's happened, it goes vertical. It's going vertical. And if you plotted gold from when I went, oh, look, it's broken out, which was 2000, whatever it was, I'd expect it to go at 45 degrees, not at vertical. And so, I would say I would be looking at gold to be at 5,000 by the end of the Trump administration. Well, it could be by Christmas at this rate. So if you think, and I've been saying it, my theory is gold is for war. That's why countries keep it. All the countries are buying it to put it in their warehouse just in case the worst happens. That makes the price go chunk, 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 chunk. Well, the moment it does that, either other things are happening which you haven't thought about, or bad things are on the way. So that's why I'm not very happy at the moment, even though I'm coining it. So the only thing is, David, is that you could think about the US government shutdown. That makes people worried. That makes them worried that the dollar will be going down. That it's all sorts of reasons to run for cover. And you run for cover in precious metals. And so that's one way of explaining it. But, America's gone through shutdowns on numerous occasions before, and they're not really shutdowns anyway. They still pay the Social Security. The soldiers still march. Most of the offices are still open. Yes, Smokey Bear in Yellowstone has had to, take a day off. But, it's not such a massive big deal because it's happened so many times now. So you could put it down to that. Now, what you can also put it down to is the Treasury is obviously printing like crazy, and it's doing it because it held back cash before the shutdown, because it always does, because it saw it coming, and you don't have to be a genius to work out it was, and then it flushes the system with cash. It's also, if you look at the bond curve, looks like they're monetizing the short end, i.e., when a short-term bond comes up, they're not replacing it with a new bond at the short end. They're just handing out cash, and the cash goes into the system. The banks literally have a real-time feed of seeing that money coming down the pipe, and they take it and give it to people who want to put it into risk assets, and they do it themselves as well. So that puts a bit of upward pressure on things like gold, things like silver, things frothy assets like Bitcoin and the stock market. And you're seeing that. So you can put it down to that. And finally, rather than the four horsemen of the apocalypse, you could put it down to retail FOMO. Now retail is getting FOMO because the price has moved so far. The sort of people that say, "Oh, my next door neighbor bought a new car because he had silver and he bought it at, $2 an ounce and sold it at 45. Oh, I need some of that action." And that FOMO, which is the curse of the private investor often, because they have short-term joy and then have long-term grief. That FOMO, I think, is now starting to be underway, but it could run a long, long way. So anyway, I wish it would go slower.
What happens when something goes too fast?
Well, it's called a bubble. Boom, bubble, bust. Up like a rocket, down like a rock. And I don't see that for gold.
Let me just push back slightly, Clem. I'm not disproving your point. I'm just trying to
No, sure.
make another point here. We could have said the exact same thing a year ago when gold was at, not even a year ago, $3,000, and it climbed 50% from 2,000 to 3,000. We're only having this conversation now at 4,000. I mean, what's to say this isn't the first inning of a multi-year bubble, and this isn't a mini bubble at all? I don't know. I'm just speculating.
Absolutely nothing. Absolutely nothing. I like to draw my voodoo lines on the chart. And originally I saw $3,500 because in that breakout I did my voodoo and it said $3,500, and a few months went by and I did a bit more voodoo and it said $4,500. And now it's more like $5,000. And so, yes, I see a top at 5,000. But if gold is for war, gold at $5,000 is a pretty scary signal. But yes, I mean, another thought is, what if gold is at this price now? And most people aren't even thinking in those terms. Yeah, I mean, there's terrible things going on in the Ukraine. Yeah, Pakistan and India had a bit of a punch up. Yes, it's pretty awful in Israel, and they blow up Iran and all that. But it's not the big one. And the big one is US versus China. And not everything you're seeing is US versus China. Well, what's the price of gold then? I mean, it doesn't. I can't even wrap my head around that one. So you've got this situation where it could really, 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 really run, but then you're getting into, a fog of the unknown that is so thick. It's very hard to guess what to do. And right now it's just running hard, and I literally spent a large chunk of this weekend. I'm on holiday in Greece. But I still spent a large part of this weekend trying to work out other explanations for these fast price moves, these fast markets. That wasn't something awful. And that the three things I said earlier were the best that I could come up with. And it's still not satisfying to me.
What do you make of the fact that maybe gold's pricing in something awful or apocalyptic happening in the world, but the stock market isn't? Certainly the NASDAQ isn't. S&P's at all-time highs, and so is the NASDAQ.
Yeah, but that's a function of liquidity. And this conflict, this US-China conflict, and there is a conflict, it's just at a high level at the moment. It's at a trade level, and is also at the pinnacle level of things like ideas and education. That's where there's a conflict going on. I could say war. It is a kind of war. Information war is going on, and it hasn't gone down into the lower levels. Industrial war, land war, right? So we're not down there yet. But the solution to this conflict, as far as America is concerned, is America reindustrializing and being a workshop of the world again, rather than it being China that's the workshop of the world. And the tension you're seeing is America can't make a lot of this stuff that it needs to make to be the workshop in the world. That's why it's investing in all these primary critical mineral people, because if you can't get rare earth, you can't make chips. If you can't get strontium, you can't make strontium. Sorry, I was thinking of a different metal. If you can't get all these critical minerals, you can't make fighter planes, you can't make submarines. So that is where the conflict is at the moment. And of course, you've got to flush your country with money to reindustrialize. You've got to have a weaker currency to reindustrialize. But the conflict is there. The economic outcome of that is, a weaker dollar, inflation, going for growth, and all the sort of interventions you're seeing with Intel, with Mountain Pass. That is all about America versus China. But if gold is already at $4,000 an ounce because of global tension, America versus China being the ultimate global tension, I mean, it's a very, 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 very volatile situation we find ourselves in.
All right, so let's talk about where this could go. So this kind of aligns with what you said earlier. Goldman Sachs is predicting $4,900 by the end of this year. Sorry, the end of next year, December 2026, $4,900 gold. Previously, they targeted $4,300 by the end of next year, so they've upgraded their forecast somewhat. You were saying what, $5,000 by next year?
But I mean, they're probably drawing the same lines on the same voodoo chart as I am. But at the way it's going, it's almost them hedging their bets, say, at the end of next year. I mean, but that's not the shape of the chart, right? It's right vertical. I mean, you could be looking at weeks at the trajectory it's going on. Now, of course, when the markets get hot, that's when they pull back. And of course, you go up vertical, you pull back, you go sideways, you go up vertical, you reprice, you go up vertical. That is one way that markets work. But that chart is, and there's quite a few charts out there in very different places where it's been doing that. Suddenly, boom, up it's gone in a straight line. You've seen that in European defense stocks. I mean, that's not good, is it? You're seeing it in the precious metals. You're seeing it in various places. You're starting potentially to see it in oil. So, there's a lot of pressure in assets going on now. And the obvious answer is, of course, a weakening dollar. But, that is the old-fashioned way of looking at it. Oh, well, it's the dollar, it's the end of the dollar, de-dollarization, blah, 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 blah. I mean, that's so old, and that's been going on for so long. Didn't affect gold and silver then. Oh, inflation makes gold and silver go up. Didn't do it in 2020 and 2021 and 2022, did it? And now all of a sudden, and if you think about it with my idea that gold is for war, if you're thinking gold is for war, Trump gets in, declares trade war with China, boom, up it goes. Yeah, so that my thesis that gold is for war, Bitcoin is for flight, matches what we're seeing. So if I'm right, and I hope I'm not, frankly, if I'm right, and this price keeps going like that, something wicked this way comes.
By the way, just slightly off topic, Japan's 30-year bond is now at the highest level ever. This comes after they voted in Sanae Takaichi. I apologize to the Japanese if I pronounce that and mispronounce that, but it's a new prime minister that's set to take office this month. He is a hard right conservative, someone who's seen as a proponent of Abenomics, the economic strategy of the late Prime Minister Shinzo Abe, which touted fiscal spending.
It's a she, David.
It is. Okay, well, my apologies again. Fiscal spending, loose monetary policy, and structural reforms. And so with the coming of a new prime minister, bond vigilantes, according to this article, are now revolting and selling bonds, driving up the yields. Could this put further pressure on the dollar if the JGB yields go up? And by default, potentially capital flight will go to higher yielding places.
Well, if you think that the Japanese bond yield is going to go up and keep going up, then you don't want Japanese bonds. And if you actually look at their interest rates, I don't know what they are off the top of my head, but it's like 1.8% or 2%. It's like half of what's in America. So they've got plenty of room to increase their interest rates to a more European and American level. And I think that that's probably what they would probably want to do, because they too need to devalue the yen, and that they've done that. Now, where they're going to hold that yen is another matter. Now, what you have to understand about the Japanese debt, which is what everyone worries about, 260% of GDP, it's all with Japanese. It's not with anybody else. So Japanese hold it. And, I'm sure they'd be quite happy to get a bit more return on their cash than whatever 0.0 or negative interest rates, almost like the Swiss had. So I don't. Everybody's always predicting doom for the Japanese, and I think they kind of know what they're doing. They don't go around telling anybody, and they always say how bad they are at everything and how humble they are and how terrible their economy is. And Westerners believe them. But if you walk around Tokyo and look at the streets, you'd be surprised. You wouldn't go, "This is a country in economic problems." All you see is, well turned out people and lots of coffee shops and expensive stores. So I think it doesn't do to imagine to say it's like now Germany's in a terrible state. Oh dear, Germany's in a terrible state. 3 years ago it was in a great state. Now it's in a terrible state. And Japan, oh, they're in a terrible state. Well, maybe they're doing it on purpose. Maybe they're trying to weaken their currency so that they can have a stronger economic industrial base because they are also losing out against China. So I think that they are devaluing their currency, frankly, have devalued their currency and will continue to keep it weak. And, they will control the strength and weakness of it with their interest rate policies. And they've got plenty of room to make higher interest rates if they wanted to. That's a contrarian opinion, mind you, but I just don't see. It's like when they say, "Oh, China has no room to stimulate its economy." This was a few months ago before they stimulated their economy and now got a runaway stock market. And it's like, well, they haven't got runaway inflation. They haven't even got high inflation. So they've got plenty of room to stimulate their economy in the same way as Japan can, because they've got low inflation. They can stimulate if they wanted to, but they don't.
What is your view on the 30-year or 10-year, the long end of the curve in the U.S.? Treasury yields in the U.S. up or down towards 2026? Will yields follow inflation? Will they follow inflation expectations? Will they follow economic growth, or none of the above?
The bond yield is a political thing these days. And people like the Treasury and the Fed have as much control over it as they want to have until suddenly they would lose all control. But that's miles and miles and miles away. And they can bend that curve and they can twist that curve as much as they want. And they will. Again, interest rates are coming down in America, and therefore bond yields are going to go down, and bond values are going to go up. That's and the dollar is going to go down. Because if you think about you've got to be a Trump whisperer, God forbid, and he wants to reindustrialize America. He wants to bring it all back home. He wants MAGA and all that stuff. Well, that means having a more competitive basic set of industries. And for that, you need a weaker currency. And for that, you need lower interest rates, right? So people can borrow money and build factories and build shipyards. Well, so lower interest rates, higher inflation, weaker currency. And that's how you get a very quick acting boom. That's the old fashioned boom bubble economics. And that's what America's going to get. And a lot of people are already running from that. And you could say that's why gold is running, because it's all about the dollar. Well, when you think it's all about competing with China, not necessarily in a very friendly way, then you've got the second string of gold going up, which is gold is for war. So you've got these two horses of the apocalypse running. And, you're starting to see disruptive markets appearing.
Here's another article from CNBC. The shutdown of the government has prevented government data from being released in the labor market. So we don't have official non-farm payrolls data from the BLS. However, we do have private numbers. We have ADP, for example. The Carlyle Group is also projecting that this month could be pretty weak for data. Firm said its proprietary data show job growth of just 17,000 for the month, which would be even less than 22,000 gained in August, reflected in the Bureau of Labor Statistics data, with the BLS shuttered and data release is suspended until the impasse between Democrats and Republicans is resolved. Wall Street firms are rushing to provide alternative measures to paint a picture of where the U.S. economy is headed. If it is indeed true, Clem, that the labor market is weakening to this kind of extent, can we still expect inflation?
Well, I mean, if they print money, you get it. If you look at inflation, it isn't necessarily bound to those sort of numbers when you have a economic dynamic where countries print money. And it's the printing of money and the monetization of money that creates inflation. So it's your money supply, not your employment situation, not whether you've got high employment or low employment. That's only in a sort of steady state situation, old-fashioned situation. And I don't think we're in an old-fashioned situation anymore. I think that's gone. We're now into a new era that's very fluid. The good news is you've got AI. The bad news is you've got NS, and I call NS is natural stupidity, and we're seeing plenty of that. And they're the two things you've got. You've got this ever increasing drumbeat of global stress, which is totally unnecessary, totally ridiculous, totally damaging, totally awful. And then you've got this drumbeat of ever increasing technology, which hopefully will get us into a good place before the other lot get us in a bad place. But so you've got, I mean, I think, so I understand that lots of companies are kind of freezing their hiring because they're seeing how much they can replace with AI rather than hiring people. I mean, so that will put pressure on your jobs market. And AI could be quite a deflationary thing because if robots are making your sneakers and you don't have to have people in there, your cost of goods goes down. And you get into the situation that imported deflation into America when China was doing it. So you've got all these disruptive influences coming out of AI. Yeah, people spending trillions on server farms, us running out of energy and copper and all that stuff. That's massively disruptive, but potentially massively positive. And then you've got this global stress stuff where everybody's trying to be the big I am, and world, which is pushing us towards terrible situations. So and that is creating market conditions that are very, very volatile. And if you think that Bitcoin could be $1 million a coin, the answer is correct if you had runaway inflation in America. I mean, you can have $100,000 beers, like they did in Germany in 29. Not that I think we're going to have that, but I think we've passed a point of stability and we're going into very, very chaotic situations, and entropy is going to go up a lot and cause all sorts of wild outcomes. And of course, for the trader, that's brilliant. For the investor, that's worrisome.
Yes. What about silver now? We have to move on to gold. If gold is for war, what is silver for? And why are we seeing $40? By the way, it's a price that we haven't seen since 2011. And people are now talking about $50. If gold breaches 50, no, what am I talking about? I am way behind. I'm sorry, I haven't had my coffee yet. I meant $50. We're already at $50, Clem. We're at $47, $48 on silver. That's a price not seen since 2011. And then prior to that, the 80s, the early 80s. Okay, and by the way, it didn't stay at $50 for very long in either of those bull cycles. So this is truly historic for silver. Why is silver reacting the way it is?
Well, another way, if you want to talk history, there's been a fairly large amount of inflation since then.
That's
So,
right. That's right.
what does that make the terminal price? So I look at silver as the fast horse. Okay. So, gold starts to move and everyone goes, well, what's going on there? I don't understand. Gold's going up, gold's going up. I don't understand. Maybe central banks are buying it. Maybe countries are buying it. Oh, well, that's interesting. Maybe I need to buy some gold. Gold's going. Oh, what about silver? What about silver? Oh, it hasn't really moved much yet. I think I'll buy some of that. Oh, that's bound to follow gold. And in they go. And then you get the momentum up. And once the fast horse is running, it's running. And it's also what I call it retail gold. Yeah. Because if you're a normal Joe and you think, right, I want to buy silver, well, you can obviously go in the market and buy it as ETFs. And that would be a sensible thing to do. But a lot of people go down a coin shop. And they'll go, show me some gold. And they'll look at this tiny little bit of gold and they'll go, oh, that's quite expensive. Show me some silver. Oh, like I get a sack for that. I get like, oh, it's only 50. I can get, oh, yeah, I can get best part of 80 of those coins for the price of one of those gold ones. I'll have that. Give me a sack of silver. That sounds good. So it's more the retail. And of course, retail is much more frothy than institutional. So when silver starts to run, it runs fast and it also can run more. So you could see gold go another $1,000, say, for example, and then see silver double. And so, in a sense, if gold started to slow, if you wanted to play the trading game, you'd flip into silver and see if it carried on running because it's quite capable of running after gold stopped because, you know, B to G, business to government, that's gold. B to C, that's silver. And then, if you want to look even further down into the land of obscurity, you've got platinum and palladium, which used to be 1 to 1. And they're like 3 to 1 at the moment. I mean, is it three? Yeah, roughly 3 to 1. Maybe not 3 to 1, two and a bit to 1 to gold. So they could double just to get parity with gold. And so, you've got all these different variables going on like crazy. I mean, another one to think about is, I mean, silver is thought of as very important with the AI revolution, but stop and think about how much is made. 3,200 tons of gold, 25,000 tons of silver. That's 8 times. Well, if silver was 8 to 1 to gold, that would be a wonderful world.
Do you think silver could sustain above $50 this time once it breaches that
I
price?
mean, unless suddenly peace breaks out and Donald gets his Nobel Prize, it's going to go way further. I mean, gold. If gold just keeps trundling, well, it's not trundling. If gold keeps going the way that it's going, or even if it slows down and starts to trundle a bit, silver's going to go quite a long way past this. And I mean, does anybody think it's not going to go smashing through 50? I mean, why wouldn't it? I mean, you could say, well, gold is toppy now. You could make an argument for that, and I wouldn't, but you could make an argument for that. Oh, gold's had its run, it's all good, and it's not, it's enough. But it's quite difficult to do so. But if gold just continues to do what it's doing, even at the 45 degrees rather than the 90, silver will run and run and run. And $100 is I mean, I thought $100 was a stretch only a few weeks ago, but now it seems to me to be a reasonable projection, a reasonable destination, not a dead cert. I mean, $50 now that's looking like a dead cert. Didn't look like a dead cert 3 weeks ago, did it?
Do you think that precious metals will outperform cryptos again in 2026? Sorry, I that was too vague. Bitcoin in particular.
No, that's okay. That's not too vague.
Because some cryptos did outperform gold and silver by a tremendous amount. But let's just zero in on Bitcoin in particular. Bitcoin, I think, and correct me if I'm wrong, I think Bitcoin led gold and silver in this rally, because it already went up 150% or something by the time it reached $100,000, which was late November last year. And after it reached $100,000, it's been hovering around that range, and it's up only 25 to 30% year to date. It's great, but most of that rally has already happened. And so comparatively speaking, it's underperforming the precious metals this year. What about next year?
Well, I everyone's been telling me I'm wrong about Bitcoin since I got out in November at 100,000, and as you say, it's been hovering. Now, so there's only one question: is can it go on another leg up? And it's almost been hovering for so long, it's not even part of that move anymore. And we've seen all this treasury strategy stuff, which is kind of a little bit surprising, and the amount of racket pro Bitcoin to the moon that's out there is absolutely stunning. And it's kind of trying to get out of its range, but it hasn't managed it. It pulled back today, quite significantly. So I'm a bear. I'm a hibernating bear. I mean, the thing is that if very volatile geopolitical stuff kicks off, it will rocket for sure. But if it doesn't, if we carry on doing what we've been doing over the last year, at some point there's going to be exhaustion and it's going to get into a crypto winter. And I've been expecting a crypto winter for 6 months. So I've been wrong about it going down, and I've been right about it not going up. So, so I'm a half wrong there. And I don't, the longer it stays in this range, the less likely it is to make a sudden Bitcoin like break for the moon. And, Bitcoin's all about 10x or 5x or 4x or doubling overnight. It's not about creeping around the place and going up 20%. You can get way more fun than that from Nvidia or Tesla or Amazon or anybody. AMD went up 38% yesterday. I mean, why would the enthusiasm of the speculator is going to be heavily waning if it doesn't start to make a move pretty soon? And uh, it, I think it's almost anybody's guess whether it will, because it's all down to the NS I spoke to earlier. It's all down to the natural stupidity of world leaders.
What are they doing that is qualifying as stupidity, Clem?
Well, they're trying to fight each other. Hadn't you noticed?
Well, that's been happening since the dawn of
No, no,
history,
it
Clem.
hasn't. No, it hasn't. The end of history. Remember that when the wall, Russia fell, and America volunteered to help them get rid of all their nuclear weapons and all that good stuff. Velvet revolutions and all that kumbaya there was back in the day. I remember it.
Why? I don't. I haven't been around as long as you, Clem. Clem, what is your preferred asset right now in this tumultuous time, geopolitical uncertainty? Gold is for war. There's plenty of that going around right now. Is gold still the preferred play at $4,000, or do you prefer something else?
I'm going to start sweating if it gets into the 4,500 plus zone, and I'll be hanging on, I think. And if it goes through 5,000, the more it goes up, the more I'm going to be sweating when it's near 5,000. Okay, so trees don't grow to the skies, as they say, which doesn't mean a great deal, but it means that things don't go up forever. And I've had a good run, and I always get out, not at the top, not over the top and back down the other side, but normally about two-thirds of the way up. So if I get out of 5,000, it's going to 8. But I'm worried about the velocity of this move, not about the number. So I'm cool with that. I mean, I am now, I think, moving into American defense stocks because they look like they're starting to run. And the defense stocks in Europe have run, and in the UK they have run. And if you look at Lockheed Martin, its recent performance since say August. Oh, that's an interesting looking chart. I mean, you don't often see stocks do that, what it's doing, which is not a big move, but it's just going accelerate. And that's what I look for in charts. I look for accelerations, and certain patterns do certain things. Up like a rocket, down like a rock, accelerate. Just keep going up like that, smooth as silk. All those sort of things. And I look for those patterns because they tell you about the underlying dynamic driving that market. Well, if you look at Lockheed Martin, I think they pay a 2.5% dividend. I mean, give me a break. Yeah. And they're on an 18 PE when the S&P is on 28. Give me a break. And all of a sudden, and everybody's shouting at everybody, and now China's helping Russia fight the Ukrainians, and America's going to send cruise missiles, maybe, maybe not. Oh, blah 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 blah. And then your defense stock starts to do that.
Are defense stocks the play right now for you, Clem? Are you anticipating more
Well,
conflict?
they have been in Europe. They have been in Europe because the American administration told the Europeans to defend themselves while they went to war with China. I mean, they didn't exactly say that, but they might as well have. And bang, up went all the European defense stocks like a blooming rocket. And you're talking about X multiples there. And that was very good. Yes, I like that. So I'm still positioned there because, unless peace breaks out, they're just going to have to gear up. They're going to rearm, and a rearmament play is a big deal, right? And if America starts to approach getting toe to toe with China and shouting in its face, then they're going to have to rearm or arm even more. And the Chinese, I told you this last time, they've got cliff climbing ships. They've got these boats that come in, and they've got these so they can put gangways up onto tops of the Taiwanese cliffs because Taiwan doesn't have any beaches, so it's got 3 beaches. So they have built cliff climbing ships to invade Taiwan. So they've already built the ships. They've already built the equipment. They've already said they're going to do it. Right now, hopefully it won't happen. But if it does, Lockheed Martin and the likes of that, Northrop Grumman, and they're just going to L3H Harris. They're just going to go ballistic, aren't they? And they're not expensive. 18 PEs, some of them. Lockheed, I think, is 18. You're looking at the
Um,
chart there in disbelief, aren't you?
well, I wonder if it's I wonder what exactly they're pricing in. Escalation in what? In which theater? There's multiple theaters. I mean, there's multiple theaters war
Well, I
going
mean,
on right now. Unfortunately, yeah.
the American administration has come out and said pretty much word for word, there's the European theater and there's the Pacific theater, and Europe needs to deal with that, and America's going to deal with Asia. Well, look at that chart. I mean, look at that. Give me a break. What is that? What is that?
Yeah.
And it's an 18 PE, and it pays a 2% dividend, and it's basically pretty much half the price of other military stocks. And of course, all the crazy ones, all the ones that are making drones and all that kind of Ukrainian stuff, they've all gone completely ballistic. I mean, I can't remember the name of Kratos. There you are. If you want another chart that make your eyes water, Kratos.
Let's take a look at this. Wow.
Yeah, wow.
How much of this is just everything moving at the same time? And that's my other question. Why is
No, no,
everything
no, no, no,
moving
no, no,
up?
no. Look.
Yeah,
In
yeah.
April of last year, it was what? It's up what 200 300%, something like that. Oh, that's this year. So it's yeah, it's up 200. Gold is for
200,
war, David, and drones
year to
are for
date, it's up 291%. The S&P is up 14%. Okay, so clearly outperforming. Yeah, there go. Okay.
gold is for war, drones are for war. Kratos is for drones. Too spicy for me. That's the sort of stuff that gives me nosebleeds, even looking at the chart. But you know, what's it telling you?
Yeah. What is it telling us?
It tells you that certain people think it's important for America to have drones, clear, present, and needed.
No,
That's not
that's
good,
right.
is it?
No, that's right. And I'm just well, it's just it's kind of ironic that the market thinks that defense stocks are now the play, given that Donald Trump's entire administration and his whole platform is de-escalation of war. I know he promised us that the Ukraine war would be over by his first day in office, and he promised that he would make Benjamin Netanyahu prime minister of Israel, stop what's going on in Gaza. By the way, this is the 1 year anniversary of the attack in Israel by Hamas on October 7th. So that's
Not
still
one
going
year.
on.
Is it more like two?
2 years, 2 years, 2 years. Yeah, 2 years. That's what I meant to say. October 7th.
Yeah.
So none of
Well,
these
I mean,
conflicts are.
these are all subjects that I'm not qualified to discuss. But I've got to say that when your defense, or is it war minister stands up in front of Europeans and tells them they've got to, deal with the Eastern Front while we've got to deal with the Asian Front, and then defense stocks explode the next day in Europe, what conclusion do you come to?
What do we do with Bitcoin then? Let's close off on Bitcoin. If gold and silver are for war, gold in particular, is Bitcoin also the alternative asset that we need to hide with?
Now, Bitcoin is for flight. Yeah. So imagine you are a somebody who's been getting a lot of money from Iran, for example, and all of a sudden you're going to have to do a runner because they're going to kill you, and you've still got, say, a couple of 100 million hanging about. Well, you can't take that to the airport or jump in a sailboat. Yeah, you've got to put it in Bitcoin. You put it in Bitcoin, and then you've got it on a smart stick or whatever. You write it on a piece of paper and stick it somewhere, and then you can go to the airport, can't you? Or whatever, or get airlifted out. And so, if you were an Afghani minister of theft, if you were perhaps a very rich Iranian thinking he might get bombed by the Americans, if you are a Russian oligarch that thinks he might fall out of a fifth floor window, you put your money in Bitcoin and you do a runner, don't you? And then if that's a situation where there's a few of you like that, up goes Bitcoin, because you can't really take, a couple of days worth of billions in demand. And then when it all comes over, it all sorts out, it comes back down again. So Bitcoin is for flight. That's my model. Now, some people might say Bitcoin is for generational wealth. All you need is a Satoshi and your family will be rich beyond infinity. But, um, its use case, the use case of Bitcoin is a alternative asset. It's no longer not correlated, so that's no good anymore. But it is very good for flight. And, that is one of its key use cases. Bitcoin is for gambling, right? Bitcoin is for all sorts of nefarious things as well. But a mainstream use is flight. And as such, it's a very strong haven asset. So if people need a haven asset that's highly mobile, then Bitcoin will go up. And when people need it less, it'll go down.
The notion that we're in a bubble, this is something we've discussed back in July when you were on my show. You said that we could be entering a bubble phase. I think we were referring to the stock markets. What do you think now? I mean, just today, AMD is up 40% on the news that it's partnering with NVIDIA. Sorry, not NVIDIA, with OpenAI. The OpenAI AMD partnership has boosted the price from 169 to 210. And so, and just in a matter of one day, we've got that. I'm not saying it's a bubble. I'm just saying that if we were in a bubble in the summertime, well, things are looking even more frothy now. Jeff Bezos himself has even said that the AI space right now is looking like an industrial bubble. Yes.
Server farms in space. Yeah. Well, I mean, he's also right. Now, what he said about that is that this is a dot-com bubble too. However, what you have to think about is what year? 2001, 2000, 99, 98, 97, 96, 95. It's somewhere in there. And I think it's probably got a year or so to run, maybe more. I mean, the thing about the internet, that was a big deal. Okay, a big deal. But AI is 10x that. It's so much more of a big deal. I was one of those internet.com successful .com boomers. I mean, I had a .com boom company that went from 10p to £2.50 in 4 days. So I know all about that run. And he's right. There will be mass casualties in the AI field. And out of that will come absolutely Goliath companies, for sure. That's absolutely going to happen. However, where are we? If we're in the end of 1999, you want to be selling. But if it's 1997, there's a long way to go. And again, we're not in a vertical in the NASDAQ. A bubble goes vertical, like gold looks right now. Gold looks quite bubbly. Yeah, it goes up, it breaks up, it starts to go crazy. And then the final part of it is absolute vertical. I don't think we're in the vertical yet, but I think we're probably in the beginning phase of, we're no longer in a boom. We are now at the beginning phase of a bubble, but it could be 18 months, could be 18 weeks. It's certainly not going to be 18 years.
Google noted that searches for AI bubble have fallen a bit. So here's the interest over time worldwide, the term AI bubble. You can see it's diminished somewhat. They even wrote an article on online about how the bubble in people searching for AI bubble has burst, meaning people are no longer as concerned as before. Is this reminiscent of 1999, or is this just does it simply mean that the concern is no longer relevant, and the bubble that we've all been talking about really was just a figment of our imagination, Clem?
The only person that rings the bell at the top of a bubble is me.
Okay.
And then everybody will tell me what an idiot I am. And
right.
how I will enjoy being poor. And when everybody's saying it's a bubble, it isn't. And when everybody says it isn't, it is. And when everybody says it's going to go down forever, it's the bottom. And when everybody says it's going to go to the moon, it's the top. That is the law.
Would you characterize yourself as a contrarian, Clem?
Yeah, definitely. Oh, I'm so contrarian, it's painful. That's why I get this stuff early. That's why I come to you and say, this is going to happen, David. And it does.
That's right.
I'm not like some of your other guests that predict the past.
What do you mean predicting the past?
Well, it's much harder to predict the future than the past, so a lot of people prefer to predict the past.
Give us one more insight about the future, Clem. Something we haven't talked about. We'll close off here.
Well, I mean, I think that it's going to get harder and harder to predict what's going to happen because volatility is going to go up and up, but the dollar's coming down. People are going to be running away from the dollar, but trying to keep their dollars. So there's going to be a lot of hedging going on, and there's going to be a lot of stuff happening. Okay, let's put it another way. The US versus China is a big hairy deal. Work out for yourself what's going to make you money there because you might need it when you head for Chile, right? And then the other one is AI is a massive, 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 big hairy deal. And if you can pick up the right winner, the right area that no one's thinking of, and there's loads of them out there right now, you can stake them out and get in early and you'll make a fortune. Let me give you an example. I mean, well, copper is a perfect example. There's just not enough of it. But what about people that make copper cables? Is that a good investment or a bad investment? And I was looking at all the big cable makers that make cables for server farms. The trouble is, obviously, they're going to have to buy copper. And they're going to have all these orders, and copper's going to go for the roof. So their margins are going to go like that. So maybe not a great investment. So, there's going to be demand for commodities, strategic metals, like there's never been before. There's going to be demand for certain things that are just going to spin people's heads. They're going to boil the oceans. So, what assets, what companies do you want to be long of? Because nobody knows totally yet. And the full implications of this is only starting to dawn on people. And it's just such a massive thing. It's like when they invented the steam engine. It's like that, but it's also going to be at an accelerated pace. The big stocks in the good old days were the railway stocks. It all came from the steam engine, steam power. Railways was massive. The Vanderbilt fortune was built on the back of it, for example. And that is the situation we're in now. There's been a moment of a breakthrough in science and technology, which is AI, and that is going to do for humanity what artificial muscle did for us. This is artificial brain, which is a 10x for that even. So it's a 10x and a 10x. It's like that's what you've got to be focusing on, finding things that will be on that rocket ship. Copper is one.
Yeah, I copper has gone up a bit. Since August, since the big price adjustment on the COMEX in August. We will follow up with copper in another time. I'm just going to close on this note, and maybe you can respond to that. This feels to me a lot like 2021, where pretty much everything was going up. Well, bond yields have come down slightly. The 10-year yield has come down slightly. So bonds are doing quite well this year as well. So it feels like anywhere you go, you put money anywhere, you're going to make money. And I don't know if that's a good thing or bad thing right now.
Well, it's normally a sign of the end, but I don't think it's everything going up. But there's certain.
No, absolutely not everything. I'm talking about the major asset classes that I'm looking at. Yeah.
We are in a very interesting moment, and as I set off by saying, it's like I find it disconcerting. So you have to be, either buy and hold and buy the dip and not, watch your show, David, or you have to be like us, which is always trying to work out what's coming up next. It's what comes up next is where the money is. And, I was speaking about gold a long time with you, and then platinum and palladium a long time back, and defense stocks and copper recently before it started to move. And, that's my game and that's your game. And I hope your viewers are having a good time watching us.
This has been a great talk. It's an important talk on this monumental day when gold and silver are at both historical levels. So I appreciate your insights, Clem. Tell us where we can find you.
Well, you can find me at that thing that's been on the screen the whole time, I hope, which is on X, Clem Chambers. And you can find me on my new site, which is ANewFN.com, which has just released, for you British viewers, free real-time prices, which is the only free real-time prices in the UK that you can get. And in due course, guys from the States and girls from the States, we'll be doing the same for the American market. So you might want to check us out. And as I say, Forbes, I write regularly on Forbes. And of course, I appear on this amazing podcast with David as often as they let me on.
Absolutely. We'll have you on as often as you are available, and I appreciate you coming on today. Thank you very much. We'll put the links down below. Make sure to follow Clem on X. His handle is down below. And
YouTube
we will,
too. I forgot
and
YouTube.
YouTube.
David impressed me so much with his channel. I've started my own. It's called Clem Chambers Alpha.
Oh,
And
wow. I didn't know you. When did you do this, Clem? When did you start
a
this?
couple of weeks ago, and it seems to be going a little bit ballistic. So
We could have led with that news, Clem. Clem Chambers. What is it called again? I'll put the link down below.
It's Clem Chambers Alpha.
Clem Chambers Alpha. I like the this is it. I like the profile picture. Did AI do that, or did you hire an artist? Is that something?
Actually, that profile picture was one of the first AI picture making things that came out about 3 years ago. Because I'm always like to get there early, and everyone says, "Why do you have that ugly picture there? It's so ugly." But I like ugly pictures of me because it gets people's attention. If I put a pretty one, no one wants to click on it.
Okay, all right. Well, we'll click on you regardless of your hair or your profile picture. Everyone, check out his channel. Thank you very much, Clem. Next time.
See you later.
And thank you for watching. Don't forget to like and subscribe.